Okay, good morning, everyone. Let's get right into the stock market technical analysis. We're going to kick off a pretty busy 2 days right now. We've got the Fed coming out here in a few hours, going to give us their reading on what they're expecting to do around rates. And then tomorrow we have big cap tech earnings with a bunch of those. I think Google, Microsoft, several. Apple is reporting. There's several. I think there's 3 of them that are reporting earnings. So big market moving events over the next 2 days. Let's dig into these charts, see what we have going on. The Fed's going to come out. It's pretty much priced in that they're going to give us a 25 basis point rate hike, and then it really comes down to what their guidance is after that. So if they guide hawkish and say that they're going to continue to raise rates, and they need maybe even look at higher rates, or maybe even surprise the market and do more than a 25 basis point hike, a 50% basis point hike. I don't think they'll do that. But if they do that and they start to guide hawkish, then look for the markets to really start to sell off. Because if I go to the daily chart here on Triple Qs, we've been rallying into the Fed. Okay, so the market is anticipating that the Fed is going to pivot, essentially, that they're going to do the 25 basis point hike, but then pretty much pause hiking rates and wait and see where we land next. So that's what the market's kind of pricing in. If that ends, if that's not true, the market will have to reprice its expectations to the downside. So that is one thing we'll want to look for. And then again, if they do pause and they do start to, show that they're going to ease up on rate hikes, then the market can probably hold up here or even rally. And then obviously we have earnings coming out on Thursday, big cap tech earnings. So next 2 days are going to be very telling. There's going to be a lot of volatility. If you don't know what to do, I think it makes sense to just sit on the sidelines. It doesn't make sense to take any kind of large position ahead of these big moves. Again, nobody knows which way the market's going to go, so we really have to react and not get too heavy on any one side. I will be going into the Fed moderately short, not a huge position for me, but a kind of a starting short position. And looking at the Triple Qs here, no real signs on the daily in terms of divergences showing up. I don't see anything that's telling me that we're going to make a turn and head down on the daily chart. We are at kind of key resistance. If I go here, just slightly above it, there's your bear market trend line right there, and we're just trading above that over the these last pretty much all week, been just chopping around the 200-day moving average above these trend lines. So if we're going to have an impulsive move down, it would trap these longs here. I don't know if I see that or not, but I do see on the hourly chart. If I look at the hourly, you can see here that we've been making a series of new highs, and the most recent high that we made was a divergent high right there. So we have negative divergence on the hourly chart, telling me that we're going to likely go lower. We also have this trend line to watch. Today, I'm watching this trend line. You can see all these reactions. We've got 3, so it validates that trend line. I think we're probably going to come in and hit that trend line. That might be right after the Fed. We'll see. But I would be looking for a tag of that trend line at some point today. I think that's likely, and then we'll see. If it's before the Fed, then I'll probably maybe even lighten up on some of my shorts and just wait. But as of right now, got some shorts looking for shorts on Triple Qs, looking for a move down. Even if we pop after the Fed, if we pop up and just make a slightly new higher high, it will still probably be a divergent high on the hourly chart and would likely get sold into. So we could pop up right after the Fed, and then with the large cap tech earnings coming out tomorrow after the bell, sell down on that. That's completely possible. Okay, the NASDAQ futures NQ, you can see here, again, here's your downtrend line on the bear market, and we are just slightly above that, above the 200-day, but just not really going anywhere. And the market's not going to go anywhere until we get these major events out of the way. So something to look for. If we look at the hourly, we do have that negative divergence. This was your last divergent high here. Now we did get the pullback, and we are really just kind of trading in the middle of what looks to be this upward price channel. Got this upward price channel here, and if I just kind of extend that out. We're just basically right in the middle right now. So it can be anywhere. It could go anywhere, after the Fed. We could pop up to the top. We could sell down. The one thing I'd be looking for really, besides just, moving in and out of this channel, would be a breakdown to the downside of this channel. So if we go down to the daily and you start to see us break to the downside and really start to sell down back below the bear market trend line, you get a daily close down there. That's going to be pretty bearish, signaling that likely we just had a false breakout and we're going to make that next leg lower in an ongoing bear market. So as of now, we're treating this as a bear market rally. We rallied into the Fed, and now we're looking for signs that maybe this rally is done. Now, it doesn't have to finish today after the Fed. We could maybe pop up after the Fed. I think we'll know probably by, really by early next week, Monday or so of next week, we'll probably have a pretty good idea on where this market's heading for the next tradable swing trend. So that's all I have on that one. The S&P 500, the SPY, all right, on the daily chart, there's your downward trend line, your bear market. Again, just trading slightly above it. We're above the 200 simple moving average, above the trend line, and that's it. And price action is bullish. If we look at the daily, I don't see any divergences really showing me that we're going to, reverse right here on the daily chart. If I go down to the hourly, you can see that, we did have some negative divergence, and it's continuing to extend. We made a new higher high right here, which was a divergent high. So we do have negative divergence on the hourly. Doesn't mean it has to, break down or, we could continue to make a new divergent high after the Fed. So maybe we pop up, make a new divergent high, then roll over. At the end of the day, we still need to see, really for me on the daily, it's a break back below this trend line here, this bear market trend line. All right, we get that, and that's going to be an indication that the breakout over the last week that we saw was a false breakout, a bull trap, and we're likely going to head much lower. So we have to see that. We need to wait. Okay, so with the Fed, we're going to probably have some movement in gold and the dollar. So gold, here's gold futures, just been walking up this upward trend line on the daily chart. No real indication of negative divergence here on the daily chart. Now, if I go down to the hourly, I am seeing just slight negative divergence here. You can see it right there. Not really confirmed, but it is there. And if I reset this, you'll see there's some negative divergence on the PPO and the RSI on the hourly. So the price action that we just popped up right in here, that's divergent high. It made an equal high as before, and yet lower momentum. So slight negative divergence on the hourly. If I had to lean one way or the other after the Fed, I probably think we're going to get a pullback in gold and a rally in the dollar. All right. If I look at the dollar, you can see here on dollar futures, this has clear bullish divergence on the daily chart on the PPO, and it's just it's hanging on there on the RSI. So all of this price action down here has been divergent lows. It's building a bullish base from what I can tell. So you start to see a breakout, especially of this trend line. I've really got, my trend line starts back here on November 22nd. Maybe you could draw something like this. Probably could mark something like this from the highs. I actually kind of like that a little better, marking that from the highs right there. That gives us one reaction here, one there, and just kind of the most recent one here. So if we start to break out, you see some sort of big green candle on the dollar. That's likely going to be the buy signal for the dollar. Should be bearish for the market and bearish for gold. So we'll keep an eye on that. Definitely have a bullish setup, but no actionable buy trigger. So this is obviously waiting for the Fed as well. And going back to gold, you can look at GLD. You can see here, this basically on the daily chart has just a bullish trend moving up. I don't see any real negative divergence on the daily. If I roll down to the hourly, I can see some negative divergence there on the hourly, right there, okay? So that tells me that we're likely going to get some sort of a pullback, some sort of a break of this trend line and start to pull back, all right? And so when I look at that, then we'll probably want to look for a move possibly down to this one. It seems like there's decent level of support right there at about 168.50 or so. That could be in the cards for a GLD in the near future. A break of trend and a move down to that 168 area in the 200-day moving average. Good support down there. I'd be a buyer of dips down there from my perspective. We'll have to see how the charts look, if it gets down there. But I suspect that's pretty decent support right down in that area. And then if you look at the miners, the gold miners, you have a bearish rising wedge pattern, clear bearish rising wedge on the daily, bearish divergence on the daily PPO. It's not really there on the RSI. I probably could mark it out. I mean, you've got it just showing up a little bit right there, I guess. So you've got bearish divergence on both momentum indicators with a bearish pattern. I suspect we're going to get that breakdown in the miners. I've got support on the miners. I've got two levels, really. First level, $30, and the next level about $28.90. Good support down there. So both those levels look decent. I suspect if we're going to break, we're probably going to get down to that $28.90 area. I'd be a buyer on dips down on GDX down in that area as well. Okay, nat gas. So the continuous contract here, nat gas just continues to move lower. I don't see any indications of a reversal yet. We're watching it. I think there's going to be a good trade here, some sort of a good opportunity to buy nat gas and go long. I just don't see any indication of this yet. If you look at the hourly chart, yeah, we have bullish divergence on the hourly, just showing up here. And then, right there. I can also look at this other nat gas contract. You can see here clear bullish divergence on the hourly there. This one, the RSI, it's still hanging on by a thread, but it needs to turn up soon to hold on to that. So we have bullish divergence on the hourly. Looking at the daily, no real bullish divergence on the daily, and just this thing's just it's just heading straight down. So I don't see support. I don't see any indication to buy it yet and go long. I'm on watch for it, but nothing yet. Okay, wheat. I want to talk about this one. I did readjust my trend line after looking at it again. I pointed it out to the private member group yesterday as a potential breakout and buy signal, but after looking at this a little bit better, I've got a different trend line. I've drawn it from the top here. You can see resistance, resistance, and we're right there. We're wedging out, so it's definitely a bullish falling wedge. We have bullish divergence on the momentum indicators with this bullish pattern, so it's definitely primed for a breakout, but I don't know if we actually have that buy signal breakout that I pointed out yesterday. On this chart pattern and this new trend line, really we need to take out this 778 area of resistance. You see a break above that, some kind of pop like that. That's going to be, a much firmer buy signal. So just want to point that out kind of with a redraw there. I still like it to the long side. We just maybe don't have that buy signal yet. All right, guys, if you're finding value in the content, you want to learn more about this, you want to learn this as a skill set, check out my stock market technical analysis course. Link in the description below. I put that together at the request of my subscribers. It's affordable. I priced it affordable. I don't give it away for free, but I didn't price it extremely obscene. So I think it's affordable for the value you get. And then additionally, if you're interested in joining up in the private member group, there will be additional market insights. I give more frequent commentary in that private member group. It's $5 a month. Link in the description below on that one as well. All right, individual trade ideas. CAT. All right, we'll just give updates on these, and then we'll wrap up. So CAT, you've got a bullish trend here. You've got negative divergence on the daily RSI and PPO, telling me that this bullish trend's about to end. We had a breakdown and sell signal, which really came, from my perspective, I think we got it right here on January 19th. All right, that looked like a pretty decent breakdown and sell signal. And then they rallied it up for the next week, backtesting essentially, overshot it a little bit, kind of made it look like it was going to recover the trend line. But this new high that was made there on the daily chart was just a divergent high. It just made a new negative divergence. All right, you can see the divergence still there. And from there, it's been all selling. Pretty much ever since we made that divergent high right up in here, it's been all selling. Pretty impulsive too. All right, you can see Earnings came out. We gapped down and sold off. And then today, more selling. And it just looks like we're continuing lower. So in my, everything looks good for the short trade. Target still remains. I'm kind of, I've got kind of two targets. For one, I think 207.50, 208. It's right here. And then there's a gap to fill right down there. So right in there is going to be the area I'll be looking to cover. I think we'll probably get that gap fill. But why wait for the exact gap fill? We get close enough. That's probably where I'll be looking to cover. And yeah, so far it's looking good. So we'll continue on. DHI. This one I think is a very similar setup to CAT. You can see yesterday we popped over and made a new high, and even today, really, we made a new higher high on the daily chart, and yet we still have that negative divergence. So those are just divergent highs. I think it's likely we're going to start to sell down soon. We've been back testing for about 2 weeks now, and I think we're about to sell down. So this bearish rising wedge breakdown, the sell signal, I believe, came here on the Thursday the 19th, January 19th, right there. And then we back tested for about 2 weeks, and I am looking for this to start to roll over. Not going to give it too much more room to the upside because I am expecting it to start rolling over with the negative divergence. So I still like it, staying in there. Support levels, we've got some support right here at, minor support right there about 91. I think we get down there, we'll break that, head down to the next level of support, which looks to be about 86. And then decent support right down here at 78, 79. Okay, that's probably my best target. There's a gap to fill down there, and it's just a very clean target. 200-day moving average is down there as well, so that's really my target. MRK, Merck, healthcare stock looks like it's continuing to roll over. I've seen no indication that this downtrend that was started on this sell signal right here on the 9th, this downward trend has I think it's going to continue. So in general, looking for more downside. Again, we had the negative divergence showing up on the daily chart, so I'm looking for quite a bit lower prices. I think we're heading down to here to about this 95 area. All right, that's decent support down there. So looking for more downside there. And these are swing trades, so they don't play out, they don't work every day, but over time, they should continue to work. Days, weeks, maybe a month or two. That's kind of the time frame we're looking at for these swing trades. VRTX, another healthcare stock here. Clean, bearish, rising wedge pattern on the daily chart. Nice, clean, negative divergence. Big negative divergence. Broke down. All right, so you had a sell signal. I mean, really, there was your breakdown on the 19th, followed by more impulsive selling. Then it rallied really strongly, real strong back test. So we got short this thing right up in here on this back test. It's objective, low risk to take the short there. I think this is, this back test is likely going to roll over and fail, and will continue lower. The other thing about this back test that's really interesting is you can see yesterday we popped up and made a equal high right there at about that 324.50 area. And we don't, it's kind of an equal high. If I look at the PPO, let me kind of zoom in. It kind of took out that divergence actually there on the PPO. So that's something to take note of. On the RSI, did not manage to take out the negative divergence on the RSI. So in general, I still like it. I still think we have the opportunity to roll over. Minimum probably back down to the 200-day moving average. We've got some support here at 273.22, and then on the larger time frame, if we're really going to roll over, then we have a weekly trend, bullish trend to watch. All right, and that would bring us all the way down into this range, maybe around 250 or so, that trend line. All right, WMG. This one's waiting for earnings. I think it's pretty obvious. I think it will likely sell down on earnings, but earnings is a little bit of a gamble. So if you're not comfortable holding a position into earnings, you can always lighten up and then re-enter after earnings. This one has negative divergence on the daily. It has an uptrend line here. We broke trend back on the 13th. All right, there's your sell signal, and then the last few weeks has just been back testing. So I suspect it's just going to continue to do this until we reach earnings. on earnings is coming up on February 9th. So yeah, I think we'll probably just grind around. Maybe even we could even run up and make a new high. Maybe they'll get it up there to make a new divergent high before earnings, and then after earnings probably start to break down. Okay, and someone asked me to keep an eye on crowd, so I'll just do quick coverage on that. Crowd, all right, so this one in general still looks bullish to me. I do have to say that. I definitely would not want to short this. So you have a bullish falling wedge pattern, okay? You have bullish divergence on the daily. It's not super well defined, but it is there. It's just not, it's not really clean, but it is there, so understand that. The only thing that this thing, you know, this is kind of waiting, I guess, for the Fed or for the mega cap tech stocks. It's likely what's going on. You have a breakout of the wedge, but it's really gone nowhere. It's being held up by this resistance level about 107.30. So you can see we're just kind of chopping sideways. So for me, the next buy signal would be a breakout above this 107.30. Some sort of a bullish candle breaking out, you know, would be likely the next buy signal. And that should bring us up to the next level of resistance, which looks pretty clean here at 124.80. Okay, we've got a decent amount of reactions right there at that level. You can see there's a gap, there's a gap, there's a gap. I like that as the target for the next level of resistance. And then you also have that gap to fill there at 136.40. And then finally, you have a downtrend line. This is your bear market in this stock. There's the downtrend line way up there at, you know, 160 or 161, wherever that might lie. So lots of levels overhead to kind of key in on. But again, for me, there's no buy signal until we break out above that 107.30 area. So bullish setup, just no actionable trade yet. Now, I think it's unlikely this one's going to break out and go higher if the broad market is selling off. But maybe the broad market's not going to sell off. Maybe the broad market will just chop sideways for the next few weeks. You know, if we see that, if the market's just kind of trading sideways and just chopping, consolidating, then stocks like these can run. All right, you can see, you know, you'll see individual stocks kind of with the bullish setups will run. Stocks with bearish setups might sell off. It's really going to be a stock picker's market if we see kind of a sideways market. So maybe that's what we're setting up for. That's all I have, guys. So drop me a thumbs up. Fed's coming up today. Best of luck, and I'll catch you on the next one.